China has averted a recession. Beijing has reported a 3.2% increase in GDP year on year. The number is for the second quarter of 2020, that is April to June. First of all, you cannot trust any number that comes from China. And even if you were to assume that this time China is not fudging the figures, then you must know that 3.2% increase in GDP is not really good news. I will explain. China is the world's factory, we know that. The global manufacturer. The number that China is projecting right now as growth, the 3.2% increase, is not an indicator of growth in the domestic market. What is happening in China right now is that its export and industrial production are moving ahead. The domestic market, on the other hand, is dead. To understand this, you must look at the breakup of this GDP figure, or what China claims is its GDP. China's industrial production is up 4.8%, meaning they're producing more goods. Now, experts say that China is overproducing for reasons best known to Beijing. Surplus inventory has always been a problem with them. Now, look at the domestic demand. China's retail sales in the same period have fallen 1.8%. So at home, the Chinese are not buying. They may be producing, but they're not buying. This is despite all of Beijing's promotional measures. I told you earlier of how the government of China was handing out coupons to people so that they would buy goods and services. Well, that sales campaign has failed. They're not buying. A fall in retail also displays a lack of confidence. The Chinese are not confident. They don't want to spend money. For them, it's not yet business as usual. And do bear in mind that there have been massive job losses in China like everywhere else. So it's not surprising that people want to save the money they have. China's fixed asset investment has fallen 3.1%. Like I said, no real good news for China. That China averted a recession was the least they could have done, having been the first country to overcome the homegrown virus. It was the first country to go into lockdown, also the first to come out of it. The virus, of course, was not a bolt from the blue for China, anything but that. So my point is, China was prepared for this pandemic. It should not go to town blowing its trumpet with these GDP numbers. They're nothing to be proud of. Instead, here's what the government should be doing, looking at the crisis that awaits the Chinese economy. First, companies are diversifying manufacturing. They're avoiding over-reliance on China. They're preparing to move out. One survey says 2/3 of large US corporates want to move their manufacturing out of China to Mexico in the next 2 years. The second point is this: the US-China trade war, it's not over, far from it. The third, China's GDP may be rising, but it is only a matter of time before it either stagnates or plummets. Do you know why? Because China is sitting on a mountain of debt. We've covered this enough on the show. Beijing's total debt is 317% of its GDP, which means its banks are on the brink of collapse. According to one report, the run to banks has begun. It started with the province of Hebei. Over the weekend, several customers rushed to banks to withdraw their money. Guess what triggered it? Hebei announced a program to limit large transactions. We've reported this too, a pilot project which will soon spread to other provinces. Here's the question: when do banks start capping your withdrawal limit? When they don't have enough cash. The people are losing confidence in the Chinese banking system. It's a system worth $43 trillion. But like I told you, Chinese banks are sitting on a mountain of debt. 317% of its GDP is around $14 trillion. And I would really want you to calculate what 317% of that number is. When you have the number, give a good look at it. That is China, an economy waiting to collapse.